It's June 30th, and I'm going to do a review of my account, starting with the 1-year chart. Oh, snap. That's not my account. That's ARK Innovation ETF. So it looks like Kathy Wood hasn't been doing too well in the past year. Down 70%. Very unfortunate. Look at this 5-year chart. She's basically at pandemic lows. Now, this ETF is actively managed ETF, so the positions in it keep changing. But I wanted to start a video today with it because I wanted to outline how bad, the growth sector has been hit. I was going through some individual names earlier, and I might go through them on this video, but I was just posting to friends. But let's go to my account first. But this is pretty incredible, huh? All the gains in the last 2 years gone. Look at the return over 5 years, 30%. Hey, you want to see something more incredible? So you guys know that she has been very big on Tesla, right? Like the biggest position in the ARK ETF is Tesla. So right now it's second biggest actually. Zoom is the biggest, but it used to be the biggest. And she's got 30% over the last 5 years, very low returns, especially nominally, right? But look at Tesla returns over the last 5 years. And that was the biggest position. Tesla 1 year is about even. 5 year looks up 770%. So even though her biggest position is up 770%, she is down. She's only up 30% on the 5 years. So that means the rest of the ETF has just been absolutely decimated. Just a complete no-go. I'm not saying this to make fun of her. Obviously, she's taking bold bets and she's sticking with it, and that's great. I have nothing against ARK, but I just wanted to, show a contrast of first of all, when this bear market began, which is February 2021, apparently, when her stuff started getting busted up. And I wanted to, put a little bit of perspective of where we're at. So back to pandemic lows when it comes to this kind of stuff. The things that are winning right now are just value stocks and things like that. But anyway, back to my account. Like I promised, you already saw it. 170. I was down 5.7-ish thousand today. Not a very good performance for me today. Down 1.42 on the week. Down 5.5 on the 1 month. Down 12.46 on the 3 month. Definitely losing to the markets today. Down 3.55 on the 1 year. And this is the all-time chart. I always have to say when I show this that I started investing with this account on August 28th, 2018. So that's why it looks so flat before then. All right. Now I want to go into the account investing tab. Just get an overview, mix it up a little bit, the order. I've increased the leverage a little bit because I have sold additional puts to try to get into some more Paramount shares. I'm going to scroll quickly through the options positions, and then you can pause the video player at any moment to try to figure out the exact position. All the information you might need is listed in that little box right there. So feel free to pause it at any time. I'm going to scroll through it quickly. A lot of the Chinese ADRs are down 13, 8 or 10, 11%, etc. Okay, equity positions. Apple's a big loser today, down 1.8%. I think the market was down maybe 0.8, something like that. Everything else relatively flat. Goldman Sachs down 2%. Paramount down 2%. Smith & Wesson down 5.5%. Just getting killed. Absolutely killed. So no bueno. Let's see the watch list. Lithium, I've been trying to figure out if I should do a play on lithium. I'm thinking maybe I buy a call on a lithium company and do a put on a lumber companies. That's kind of what I've been thinking is a hobby play. But really, I shouldn't be doing any hobby plays. So there you go. Market SPY down 0.8%. Chemical down 3.5%. Well, All right, so that is the account. So I wanted to go through some companies just to kind of show and illustrate what kind of decimation and carnage there's been in this market. So just to kind of illustrate like where we're at, I know that a lot of companies are doing okay, but so many companies drop by like 90+%, and it's just absolutely crazy. We're gonna do it right here on Robinhood. So first one that we're gonna look at, let's take a look at Zoom, the number one holding of Cathie Wood. So 1 year performance minus 72%. Look at this. Minus 72%. This is the 5-year chart. Let's try to find out the March 2020. Where is March 2020? Man, it just skyrocketed this thing. So there it is. You can't even see it. Went from 151 to 128. So right now it's below the pandemic lows. Zoom is. So this thing was higher in 2000, prior to the virus hitting. So that's pretty crazy. And here is, the October 16 peak. Then it's been crashing. It's bad. I mean, on the 1 year chart, it's just absolutely horrific. So that's not enough. How about this little company here, DocuSign? 1 year chart minus 79%. 79%. This is the March low here. 79. It's below the March low. Below the March low when everything was crashing. This is crazy. What other company was I looking at? Let me pull up some of these companies for you guys to see, because it's pretty amazing. It's pretty amazing. All right. Look at this. I gotta type one-handed. Forgive. Okay, Upstart. Past year, it looks like it peaked here at 390. It's at 331 right now. More like 95% loss from the peak. 75% down on the year. 5-year chart. Look at this. I'm not gonna say what that looks like. It looks like a rocket. Okay, with a rocket ship. Looks like the rocket ship chart. It was 390. Now it's 31. It's horrific. What else we got here? How about this one? Gig economy, dead. Fiverr, 1 year chart, minus 86%. I don't know if you guys ever looked through these companies. I mean, we're like, the cross sector has been, decimated is the correct word. It's just been absolutely brutally, I don't even know what to say. Cripple is too weak of a word. It's been thrashed. It's been booted in the face. It's been shut up. It's been like cut to pieces. It's crazy. Look at this 5-year chart here. This is the mountaintop configuration. This is the March 2021. Oh, I guess it's above those. But look at the run up it had. It went all the way up to 323. It's funny how a lot of these stocks went into the 300s. And now it's 34, 90% loss. This is incredible, huh? Let's move on. Look at this. Look at this company right here. Twilio. Minus 79%. Look at this straight line down. There's the mountaintop. This is the March 2020 low, 84. It's below the March 20 low. Insane. Another mountaintop formation here. Oh, it went all the way up to 435. Crazy. All right. Next, you guys gonna like this one. This is a very good company, huh? Block used to be Square. 1 year chart down 75%. I mean, this is not like play money, right? I mean, this is a very legit company, and let's see if they make money. They're profitable. Look at these earnings, right? They make like 50 cents a quarter per share. That's fine. That's fine. That's not bad. So a 35.67 billion $1 billion company. Well, let's take a look at 5 share. Look at this, another mountaintop. This is the March 20 low, 38. Now it's 62. It's still above that, but still, this stock was trading as high as 276, and now, hashtag no bubble. It's 75% down. This is a great company. All right, how about this? Okay, you guys will like this one. Let me know if you invested in any of these companies and how you feel about them. How about the 1 year chart? Shopify, down 79%. That's almost 80% down since, on the year chart. And since the peak, it's higher than that because it peaked out at 170. Now it's 31. It's insane. Absolutely insane. 5 year chart. Here's another mountaintop. Technical term. So it was 34. Now it's 31. Below pandemic lows. Below. So when everything was crashing, the market was down 35%. Shopify is lower than what it was back then. Can you guys imagine that? Hard to fathom. Shopify, that's crazy. We're not done yet. How about this company? This is a solid company, hey? This is a very good company. Very big company. Very traditional company, founded in 1923. Big company. This is no joke. This is not like, a SPAC. Okay? It still has a market cap of 172 billion. It's still an enormous company. Let's look at the 1 year chart. Look at this. Down 46%, almost 50% down on Disney in the last year. 5 year chart. Pandemic lows, 85. Now it's 94. Basically at pandemic lows. 5 year return. Look at the 5 year return on Disney. Minus 10% over the last 5 years. So if you bought Disney 5 years ago thinking it's a great company, which it is, and you expect it to earn something in the next 5 years, joke's on you. The joke is on you. You got nothing. Did you collect a dividend? No dividend. No dividend. Joke's on you. Sucker. Down 10% over the last 5 years. We're not done yet. Let's take a look at some other companies here that are pretty big. Lyft, 1 year, minus 78%, minus 80% for Lyft. Let's see the pandemic close. Is this it? Okay. March 2020, 21. Now it's 13. So it's half of what it was during pandemic. Imagine you have a business, right? Check this out. Imagine you have a business that is completely unable to operate, right? During the pandemic, in the March lows. The market's crashing, it's down 35%. You're unable to operate your business because of virus situations. You're complete halt and you're burning through money like crazy. And now you're valued at half of that price. It's so blown over. Half of the price. It's insane to me. You might say, okay, fine. Lyft is Lyft. How about the real ride hailer? Let's take a look at Uber. Uber 1 year, minus 60%. But surely they're above the pandemic lows, right? Let's take a look at the 5 chart. This is March 20, 2020. 21.33. What is it now? 20.51. Below the pandemic lows. Below. We're not done yet. All right. This is an enormous company. These are not companies that I'm just showing like their little tiny specs or little IPOs or direct listings or whatever, right? These are major companies. Facebook, 1 year, down 53%. This is a huge company. Look at the market cap. It's one of the biggest companies in the world. $436 billion still. So that thing was $1 trillion in market cap. It got halved. Let's take a look at the 5-year chart. March 20, when everything was crashing, 149. Now it's 161. This thing is priced at pandemic lows. You want to see a magical number? Facebook returns over the last 5 years, 3.23%. What's inflation at? We're not done yet. We got another big company, huge company. I mean, this company was part of the FANGs, right? You know what I'm talking about? Netflix, 1 year chart, down 66.7%. Completely just killed. Let's take a look at the 5-year chart. Surely, it's above its pandemic lows. Let's see. Oh, it's 2020. Gotta fast forward a little bit. March 20, right here. $332. Right? $332. Market's crashing. Pandemics everywhere. You're thinking like the end of the world. And this has got to be the low for Netflix. 332. What is it now? 175. It's half of what it was at the very bottom of the pandemic lows when the world is ending. Look at this, man. Netflix, part of the FANGs, right? 5-year return, 10%. Can't even beat inflation. We're not done yet. Look at this. Acquisition target number 1. Nobody can afford it anymore. 1 year chart for Pinterest. Oof, that looks ugly. 77%. 5-year chart. March lows, 12.21. It's above March lows. This company is winning. 5-year return, negative 5%. The final company that is just got some staggering action here. A very big, popular, kind of legacy, but still tech-forward company. It's got real earnings. It's got real money coming in. $80.89 billion company. Even still. 1 year chart, down 76%. 76% down on the 1 year chart. It was 308. Now 70. It is even lower today. 70, down 75.86%. So this company used to be 200 billion. I'm sorry, can't do math. $400 billion company. Man, let's look at the 5-year chart. This is the pandemic low, right? Everything's crashing. Okay. PayPal, online retail, right? So we got 86.68. It's below that now. 5-year return on a growth stock like PayPal, raising revenues, 28% over the last 5 years. I mean, I have a hard time. Let's take a look at this. Let's take a look at PayPal and its progress, because I refuse to believe. Hold on, sorry. One arm tapping is crippling. No pun intended. So let's take a look at the financials here. Look at this yearly revenue chart. This looks fantastic. This is absolutely, look, revenue growth year over year is keeping up at 18%. This thing is growing exponentially. Exponentially. Unbelievable. Operating income. Look. They're making $4 billion per year. And they're increasing, like 20% their earnings. This is lunacy. Share count decreasing. Absolute madness. I want to buy PayPal. Market cap 80. Enterprise value 75. So they even have cash. They have cash. Look, net cash, $5 billion. $5 billion net. They're not even in trouble. They don't even owe money. It's crazy. Free cash flow, $5 billion. Margins. Look at these margins. They look fine. I know it's software business, but still. I don't believe it. Look at this. Even if it slows down, right? Even if it goes back down to 2019 earnings wise, this revenue is going to keep growing. This is unreal. PayPal at 70, guys. PayPal at 70. I don't know what to tell you. Market's pricing in a depression. That's it. I'm lucky to have held in with only like 25%, 30% loss. So not 30, 25%, 20%. I'm only down 20% from my highs. I'm very lucky. I like a lot of these growth companies. I want to be invested in them. If I was invested in them at the peaks, I'd be down like 80% now. So, anyways, we've got to be close to the bottom. I know it's probably another 6 months, but I can't imagine us going even lower. That'd be completely irrational. All right, well, that's it. Venting done. I just want to give a clear picture of like where some of this market's been going. There's a lot of things been going up, holding up the markets, more specifically oil stocks and healthcare, things like that. But everything outside of that has been completely, every single price hike has been priced in for like the next 10 years. I mean, how can you drop things by 80%? That's not a small number. Imagine if the whole market dropped 80%. It would be 1929 territory. All right. Showing that. Peace out for now.